Plenty more from Africa, though, to talk about this week, as the US President Barack Obama hosted 50 African leaders in Washington. Basically, he's been trying to convince them the US does want to do business with Africa. But the ulterior motive, perhaps, is to try to counter China's dominance there, because really, the US isn't in the same league when it comes to Africa's 1 billion consumers. Have a look at this here. Last year, Barack Obama outlined his plans to spend $7 billion on power generation in Africa. While on his last visit to the continent in May, the Chinese premier outlined $10 billion for construction projects, rail, roads, housing, infrastructure, all these things. In fact, all told, China is willing to loan Africa $1 trillion by 2015, only next year. Or look at it in trade terms. It's not that the US isn't trying or lacks in contributions. In fact, US-Africa trade has doubled in the past decade to $110 billion. But look at this. From an almost standing start of $10 billion in 2000, China has well overtaken US trade levels. It's up at more than $200 billion last year. But here's the real surprise. The European Union outtrades both the United States and China with $470 billion worth. But let's look at what the US is trying to do to get back in the game. With a special report for Counting the Cost, here's Patty Culhane reporting from Washington, D.C.
When did it start out with about 18 to 20?
At the first ever U.S.-African summit, the focus is on business, terrorism, and improving governance in Africa.
Fighting corruption lifts more than a country's balance sheet. Transparency and accountability attract greater investment. Transparency and accountability create a more competitive marketplace, one where ideas and products are judged by the market and by their merits, and not by a backroom deal or a bribe.
Fighting corruption is a familiar theme for the Obama administration when it comes to Africa, but some analysts say that is putting the U.S. at a disadvantage, especially when it comes to China.
They've said, we believe that corruption is something that countries evolve to be able to handle better when their economies develop. So let's not try to get them to change that much in their politics. Let's help them develop economically, and then they can take care of these problems, and their people can take care of these problems.
The president is making the case to Americans Africa matters more than just in humanitarian aid.
Some of the fastest growing economies in the world, a growing middle class, expanding sectors like manufacturing and retail, one of the fastest growing telecommunications markets in the world.
But this is the first time he's hosting a summit to try and tap into that potential. Since 2000, China has hosted 5. And it's showing in the trade numbers. In just 2 years, imports and exports between African countries and China have jumped from $127 billion to almost $200 billion. For the U.S., the opposite. Trade was $113 billion, but it's dropped to below $100 billion. Over 3 days, the summit will focus on changing that, but the president isn't going on his own charm offensive. Unlike China's leadership, he won't meet one-on-one with any of his African counterparts. He did announce a new $14 billion in business deals between U.S. and African companies. The argument from the White House, China is just using Africa for its natural resources, and the U.S. wants to be more of a trading partner.
We don't look to Africa simply for its natural resources. We recognize Africa for its greatest resource, which is its people and its talents and their potential.
But the president of the Republic of Congo disagrees with that characterization of his relationship with China.
China doesn't get its natural resources for free. If China needs to buy oil, they buy our oil at international market price. If they want wood, they buy wood at international market price. China doesn't take anything from us for free.
The U.S. president says it's time for the U.S. to compete in Africa, but it's clear other countries have a big head start, and one summit is unlikely to change that. Patty Culhane for Counting the Costs in Washington, D.C.
But for more on what the US and Africa might be able to achieve long-term, we turned to a regular guest on Counting the Cost, Hendrik du Toit, who is the CEO of Investec Asset Management. Investec is actually Africa's biggest investor with $37 billion in assets. He spoke to Ali Velshi, the host of Real Money on Al Jazeera America.
It's very clear, actually, what America should be looking for. It's time for America to engage Africa at a strategic level and make sure its businesses and its influence gets enough traction to compete with the rest of the world, not in a negative sense, but to make sure they get their share of a growth story, of the last billion-person story really left in the world on the way to development. As far as the African leaders are concerned, what they want is American participation and especially American private sector investment in their economies. And so they have definitely got a reason to be here. And I think they're rather excited by the Power Africa initiative announced by the Obama administration.
Now, let me just sort of get a sense of what African investment there is to be had, because China has really overtaken in the last few years. They've really increased their investment, not in South Africa, where you're from as much, but certainly in other African nations that were requiring infrastructure or had extractive resources, natural resources, and things like that. So it seems like there's money flowing into Africa, and lots of it. What do Africans want Americans to invest in, and what industries can Americans invest in successfully?
I think foreign direct investment is now running at record levels into Africa. The Chinese have really overtaken the US in terms of trade, but actual stock of investment, if you include the American energy companies on the West African side and offshore, America is still larger than China. But I think it's time for American companies to participate more vigorously in the rise of the African consumer. There's a big middle class developing on the continent, and that is where the opportunity is, because clearly the global brands, the leading global companies in the world, many of them are American. And so that's the opportunity. Also, mid-sized American businesses can benefit from the growing economies. And we just heard today Mozambique, which is an economy growing at near 10% rates. Mozambique has a capital investment program in its oil and gas industry of $25 billion.
Let me show our viewers the rates of return on foreign direct investment for Americans. Often when people think about foreign direct investment, we think of Asia, and Asia still provides the biggest return, 13.7%. But Africa is running second, 13%, and as a continent, it is running higher than emerging markets as a whole, which are at 11%. The question is, it's a high return, which often suggests high risk. Now, I think about Ghana. You know, President Obama sort of held Ghana up as an example of a great economy a couple of years ago, and now I read this morning that Ghana is looking to the IMF for a bailout. Is Africa stable?
I think Africa is, remember it's 54 countries. There are some very stable economies and regions. There are some areas where the stability is not as good as investors would require. But essentially, all emerging markets are volatile compared to developed markets, but the returns are potentially higher, and that's what investors want, and that's what businesses want, because businesses are looking for growth. As long as they manage those the volatility properly, they can do well. GE is doing pretty well out of Africa, I can tell you.
So let's take out the stability from the equation, because assuming that businesses need a couple things to invest, they want stability, they want rule of law. Let's look at sub-Saharan Africa, projected to grow at 5.4%, which makes it second only really again to Asia, including India and China. What are the impediments to investment there? If you've got rule of law, you've got political stability. In South Africa, certainly you have infrastructure, although there are big infrastructure developments going on. Is infrastructure the biggest challenge in Africa?
I think infrastructure and scale of market. So one of the things African governments need to do is make sure they organize their regions properly so that an investor can access more than one country, because there are a number of smaller countries there. And so it's trade policy in regions, and it's physical infrastructure. Do you have the ports available? Are the roads there? And in that sense, the Chinese have done the world a great favor by building many of these roads and facilities over the last few years, and therefore helping businesses to reach the markets which are there.
Europe's engagement in Africa is actually twice that of China. Now, is that lingering effects of colonial relationships, or does Europe understand Africa?
I think Europe has been involved with Africa for a very long time, from the colonial times, but therefore never quite withdrew and continued to engage. So what's important for Africa is that at least they get the most dynamic economy in the world, the US, the most powerful economy in the world, involved as well. and not just look either east or to their old colonial masters.